Investors are expressing risk aversion amid uncertainty in the trade relations between the United States and China. The conflict escalated on Wednesday that dampened sentiment on Wall Street. Today, U.S. stocks opened with losses. The market focuses on a weekly update on the U.S. labor market. The conflict between two largest global economies was sparked off by the investigation into the origin of the novel coronavirus. Lingering tensions are stalling the rally on Wall Street this month. Meanwhile, benchmark U.S. stock indexes are approaching multi-month highs amid optimistic expectations of the economic recovery. Today, market sentiment turned into pessimistic as investors were discouraged by a new punch towards Beijing. On Wednesday, the U.S. Senate passed the bill which would bar Chinese companies from U.S. security exchanges. Besides, the White House insists that China is to blame for the coronavirus outbreak. In his tweet, Donald Trump accused China of misleading people in an effort to disrupt his election campaign. Futures on the Dow Jones shed 0.46% in the early New York trade to 24,405. The S&P 500 weakened 0.5% to trade at 2,953.38. A series of macroeconomic data caused the durations of the US dollar rally. In the morning, the US currency firmed against a basket of 6 major peers amid gloomy Fed's forecasts of a recovery in the global economy in the wake of the pandemic. However, later the greenback lost earlier gains. The US dollar index opened the New York trade at near 99.06. Wall Street opened in the red. On the whole, the index has been trapped in the trading range of 98.80 to 101 for 2 straight months. Judging by the ongoing steady decline, the index is set to break the range downwards. Traders are keeping close tabs on weekly updates on the U.S. labor market. The number of first-time jobless claims dropped by 249,000 to 2,438,000 last week. The score again was worse than expected. Analysts had projected a steeper fall to 2.4 million. Initial unemployment claims reveal a gradual downtrend. The weekly update for the last week recorded 7th decline in a row after a soaring increase of 6.87 million in early April. Today, the market will get to know other economic data from the United States, including extending home sales for April. The Canadian dollar is trading mainly flat despite a rapid rally of oil prices. The USD CAD pair is still trading at about 1.38. In a midday, the pair briefly climbed to the level of 1.39. The loonie gave in to the stronger US dollar. Oil prices have been extending a winning streak for 6th day in a row. This is the longest uptrend for over a year. Crude prices surged more than 80%. WTI futures with the nearest expiration rose above the level of $34 a barrel. At present, analysts point out at signs of a contraction in oil output and a rising energy demand. Nevertheless, the main catalyst for the bullish trend is market optimism and solid fundamentals. Oil-related news and emotional responses are of little importance. That's all for today. We wish you profitable deals and waiting for you on our channel tomorrow. See you!